So guys, today is on the 1st of March 2026. We are going to analyze the market to have our weekly bias. But before that, fundamentally, the weekly bias is bullish. Like we all know, the geopolitical situations in the market is actually going to cause a lot. It is going to cause uncertainty in the market. So, and we know gold is safe haven. So basically, investors are going to actually invest in gold because gold is safe haven. Whenever the economy is crashing, the prices of gold rises, right? But we have to also check the chart to see if the fundamental bias is actually coinciding or aligning with technical bias. Starting from the 1 month time frame to 1 week time frame and 4-hour time frame to actually identify or to spot our bias for the week. All right. So let's go down to the monthly time frame. Monthly time frame. No. All right. So this is our monthly time frame. Right. This is our monthly time frame. Let me zoom it a bit. Right. So from the monthly time frame, you could see the price is bullish. No doubt about that. The price is bullish. Yeah. So if we are going to analyze the market, we have to look in the direction of the market. All right. You have to look into the direction of the market. So you can see from the monthly time frame, the price is bullish. It has been bullish. All right. Clear bullish. No, not even a retracement was done. All right. So let's look at this. The previous month, which was January, let's look at how the January candle ended, okay? So if you zoom it, you can see the January candle ended with a very big rejection, all right? Very big rejection, okay? Over half of the candle was rejected in January, all right? That was the reason February candle started from this zone, pushed all the way to the bottom side and push up again. Right. So the first thing we are going to do is to actually mark the swing high of January and the swing low of January last month, which is last 3 months. We are in the 3rd month, so last 3 months. Okay. So let's mark our swing high of January, beginning of 2026, and swing low of January. All right. This is the swing low of January 2026. So you could see the month of February was actually trending in the swing high and the swing low of the month of January. Okay, it couldn't break the month of January low. Okay, and the high, it couldn't even reach to the month of January high. All right. So with this zone is going to be our target where we are going to actually analyze the market to know the future trend of the market. All right, let's put fundamentals aside. Let's deal with technicals. If the technical analysis is going to align with fundamental bias, all right. So to know this, the month of February couldn't actually break above the month of January. Okay, so basically the price is within the month of January. Okay, all right. So we are going to go down. We are going to go down to the weekly time frame. All right. The weekly time frame is actually going to give us clear understanding of what actually happened within the month of February and the month of January. All right. So we go down to the month of February. The 1 week time frame rather. Sorry. Okay. So this is the 1 week time frame, and from the 1 week time frame, you could see our marks there. You could see here was the swing low of the month of January and the swing high of the month of January. Okay, so basically the month of February was trending within the swing high and the swing low of the month of February. Okay, now we are going to concentrate on these 5 candles. Okay, 1, 2, 3, 4, 5. These 5 candles are what we are going to focus on. All right, so this candle, the red candle with this high rejection, was the last week of January. Okay, the candlestick of last week of January. All right, And you can see how the candlestick ended. It ended as gravestone doji with a very high rejection. So with this candle, you can actually anticipate the next candle, the movement of the next candle. Okay, so we could anticipate that the price could hurt. The next candle could be what? A bearish candle. All right, and you can see what happened with the first week of January, the first week of February. This is the first week of February. This is the candle that formed in the first week of February. You see, with this rejection, it pushed the price all the way to this level. It pushed the price all the way to this level, okay, but couldn't close below the previous week candle, okay, which was the last week of January. Okay, it couldn't close below it. All right, which tells you that here the price has rejected over here. All right, look at how this candle ended. It ended as what? Dragonfly doji. Okay, so the whole of this zone, from this zone to this zone, was a rejection. Okay, telling you or signifying a strong demand. All right, we are going to actually mark the second the swing high of second week of February and swing low of second week of February. Now this is the swing low of the second week of February and swing high of the second week of February. Okay, this is the range. All right, mind you, this candle couldn't break above the previous week, okay, the first week of February. Okay, this candle couldn't break it. All right, now so this zone is a very strong resistance zone as well. Okay, all right, now the second week of February, we marked the swing high and the swing low. Okay, this zone becomes our strong support and resistance zone. All right, when you descend to the lower time frame. Now you can check the third week of February. Okay, the third week of February actually trended, came down to the second week of February. All right, but couldn't break it with a body. It had a very strong rejection. Okay, a very strong rejection at the lower side of the second week, the second week of February. Okay, the rejection happened and ended with what? A very strong dragonfly doji. Okay, it ended with a dragonfly doji. All right, but the critical point is that it couldn't break the swing high of the second week of February. Okay, it couldn't break the swing high of the second week of February. So the resistance still stands. All right, that is why last week our bias was not actually giving us an accurate movement of the market. Why? Because of this resistance right here. Okay, all right. So now look at the previous week, the last week of February. Look at what happened. Okay, now because of this candle, the third week of February, how the third week of February ended, we couldn't actually analyze the market. We couldn't actually get the bias of the market to be bullish. All right, we anticipated the market is going to retrace a little bit before pushing up because of that resistance above. All right, because of the resistance above. Now let's look at this here. This is the last week of this candle is the last week of February. Okay, and looking at how the last week of the last candle completed, we can see the last candle has broken what? The previous week's high. Okay, the last candle broke the previous week high and closed above the previous week high. Okay, all right, broke and closed above the previous week what? High. All right, now what we are going to look out for, this is a very strong sign for what? For bullish. Okay, it's a very strong sign for what? For bullish, but it's within the January what? Swing high and low. Okay, the price is still trending in the January swing high and low. All right, okay, so let's descend to the lower time frame, like 4-hour time frame, to check what the market is actually behaving there. All right, so we go to the lower time frame, 4-hour time frame. Right, we go to the 4-hour time frame. Let's check what is going on there. Okay. So guys, this is 4-hour time frame. Okay, this is 4-hour time frame. Now looking at the 4-hour time frame, this retracement right here, okay, was to take this liquidity. All right, it was to take this liquidity. So this liquidity was taken. All right. So liquidity taken below here. Now what happened is that after the liquidity was taken, the price didn't push up directly. Okay, the price didn't push up directly. What it did was to create a price action before pushing. Okay, was to create a price action before pushing to the upside. But look at the price action that it created. Anytime the price gives you a swing high, give a very high momentum, okay, volatility in the market, it has to stop, create a price action for the next move. All right. So this is the price action it created. From here, the price was respecting what? This trend line. Okay. This is 4-hour time frame. We have this here and this here. Okay. This 4-hour time frame created this and created a wedge around this zone. So basically, the price gave us what? A rising wedge. The price was consolidating within this zone. All right. So last week, this was our support, a strong resistance zone. Okay. Our strong resistance zone was this zone. All right. So for the sake of that, we couldn't actually anticipate the market breaking this level. For the sake of this resistance, we couldn't anticipate the market breaking this level, but it eventually broke this level. All right, it broke it to the above, came back, retested, and then gave us another break of structure here. Okay, it gave us another break of structure here, which is giving us a very strong side. But look at this, the price from here respected this, respected here, respected here, respected here, and look at the last response that it gave here. Right, it gave a very strong bullish engulfing. This is a bullish engulfing candle. These two candles right here is a bullish engulfing candle, giving us a very strong sign for high move to the upside. All right, so everything indicates that the technical analysis is actually aligning with the fundamentals of the market, or the fundamental bias. Okay, yeah, so this last sign or last price action or candlestick formation here signifies a strong bullish or strong demand to the upside, coinciding with the fundamental bias.